Hello.
Oh, Ken is here. Hello, Ken. Hello,
Hey guys,
chat.
how we doing?
Not bad. How about yourself? All good?
Good,
Great,
baby.
Great.
Good, baby.
Right here, so I can see what everyone's saying.
Yeah,
We are already getting. Yeah.
Are we all ready to talk about Ken bottom ticking gold?
Ken's what?
Ken bottom ticking gold. Did you see gold trade? Can you remember gold idea on Monday? It was just crazy, a crazy retracement back into the gap, and we traded back higher.
No, Mori, Ken didn't forget. He just sent me the screenshot, and I checked the chart, and I saw exactly what happened. So
just
Ken was
amazing,
precise.
man.
Yeah.
Come on,
Tell me
baby.
about precision, baby.
Come on.
Oh my god.
That was a real precision die. Yeah.
Yeah.
Not
Yeah,
gonna
man.
lie. That was
Clockwork
awesome.
now. This is what we got. It's going to happen today for tomorrow.
Yeah.
Well, we've run into a bit of supply here at 5,300. It's looking quite nice. We're topping out above the Asian range again. This is clockwork behavior. I think we're going to get it. If you miss this one, you don't deserve to be a trader.
You're not being called Morpheus for you were being called Morpheus for a reason, because it was here down here, right?
Yeah, man.
It was exactly here where Ken said on Monday we're gonna get the correction and the bounce, and this was absolutely disgusting. To be honest, even though I said I'm going to enter here, I did not. But I traded a gold. But I didn't take this whole move. I took
Man, I
maybe
actually
30, 40.
tried to get there as well during Asia. I got clapped all time, trying too long. I pretty much ate all my morning profits, and by the end of the day, we were all-time highs. It was just, I was so pissed that day, but this was just beautiful. It's just a beautiful retracement there.
Did you actually take that trade?
Not to the T, not exactly to the T. So I got in at, I ended up getting in, I'll tell you, at 50.45 I got in at. 50.45. So I wanted, ideally, it would have been nice to get in around 50.25. But yeah, $20 short wasn't bad. It's fine. So yeah, man.
50.25. Right here.
That's where I wanted to get in at 25.
Yeah. Okay.
52.25 was the ideal.
52.25. Yeah. So just taking the liquidity and then reversing back towards the upside.
Exactly.
Makes sense. Make a lot of sense though. Yeah.
It was beautiful. It's textbook, and I think we're going to get it today. So if we just quickly talk about FOMC a minute.
Yeah.
So, sure. Do you mind if I share my screen quickly, Jake?
Of course. Go ahead. So, we're already getting momentum on it. We did get some bullish dollar momentum. And if I'll go to 5 minutes, I'm going to take your chart and replace that.
So
there you go.
Yeah, just quickly. So this is just using Investing Live. You can see what's happened today. Look, we've obviously I'll come to gold in a moment, but we're having this pop higher for the dollar. And the reason being is because obviously they haven't cut rates. There's always that possibility. They may cut rates, they could surprise, but it didn't. Right. And the not so dovish thing at the moment is that the vote is 10-2. So we've got the same couple of people that are wanting that cut, Waller and Mirren. And obviously Mirren's that guy that was hoping, to potentially get the candidacy as the governor. He's one of Trump's puppets who Trump put in there. So it's not understandable he's voting for a cut. But the fact that only 2 members still is nowhere near, a extremely dovish Fed, is it really? So that's why we're having that bit of a pullback there for the dollar. Understandably, it's very minor. Structure's still intact. We're going for a big retest here of this, the range that I said we're going to break out of. Now, if we go to gold, so I think I'm going to be looking at some execution. I may even look at placing a buy stop, depending on the price action before I go to sleep. Obviously, it's always risky placing a buy stop because you can't observe price action, if you're asleep. So usually I like to observe that price action like we saw here, observe the bouncing coming into play. But here, I think it may be the case. We'll see. But the idea again for me is to see that price is taking out liquidity here, sweeping the low, And I think it's just going to be a clockwork situation, and we look for buying those dips, just be leaving a bit of breathing room below again, and then be very conservative. I'll go for the high. Okay, so I'll be going for the high of today, and then also I'll be looking at a runner just in towards taking out this high up here. So yeah, I think that's what we're going to potentially get today. You can see the way we're sort of double topping out, and when we're doing it all the time. Look, it's happening here. Every time we get that sweep of liquidity, it's always around the freaking Asian high. Look here on the 21st, top came all the way down. You can call me a magician, but it's just you looking at what we're doing here and then expecting that to repeat in terms of these patterns. That's it.
All right, that looks nice. I mean, it happened like 4 times in a row, didn't it?
Yeah. More or less. So it's beautiful. Hopefully Powell I'm hoping Powell stands on business today. I'm hoping he stands on business, holding his balls in his hand and be like, Trump, you're not getting that cut yet. Like, I think, to be honest, I think they're going to cut in March, but he's just going to still say, look, let's see how data goes. Just the usual crap. And markets be like, this isn't too dovish right now, so let's buy a dollar. Let's get that excuse for that technical pullback.
Yeah.
I don't know what your take is on that.
Yeah, I'm aligned with you. I'm aligned with you. I think we're gonna get that pullback, but to be honest, the most hilarious thing yesterday. Did you see the dollar weakness? To it was yesterday during the night. For some reason, just dollar went 100 pips. Euro US dollar went 100 pips towards the upside.
Yeah,
it was 2030. That was the move, and I don't know what it was caused by. I don't know if you have any insight into that, but it was so hilarious because at that moment, like 15 minutes before, Bloomberg reporter asked Trump, "How does he feel about dollar losing its value?" And Trump says, "Dollar is doing just great.
It's just great."
And just 30 minutes on it, just dollar lost 100 pips against the euro. But,
I know. But do you know what? To be honest, quickly, obviously we called these longs as well. So it wasn't just gold. We had these euro longs, which were called. I also ended up taking another position on that Tuesday. Classic liquidity sweep, entered there, and then went to the high. So I had an intraday play there. Really, this should have been a swing for me, but I was extremely conservative for some reason. This should have been my swing entry as well for like 120, which we're talking about and beyond. But anyway, so guys, we got a high win rate on these streams. I think we're we've got a good thing going on at the moment, which is nice.
Yeah, that's true. I mean, it's gonna get over once, but so far we're doing really good.
We're doing well. We're doing well.
Good. Yeah.
By the way, Trump, quickly, Jake, because you asked me any take on that. I think so. Just with the dollar first thought, I think here, obviously you spoke about this at the start of the week. This here is stops being triggered to the downside. A whole load of stops from this range. That was just a mental breakthrough. That's why. And then Trump saying the dollar's doing great. I think he's loving it. I'll be honest with you. This is what he wants. And obviously I did a video on it before, but he wants this weaker dollar. This is part of his plan.
Yeah. Actually, he said that to the Bloomberg reporter because he asked him how dollar is doing and so on. To Donald Trump said it's doing great, but then it happened, the big gap. But then he mentioned the Japanese yen and the Chinese yuan, how the government basically is trying to push their currency weaker to benefit the trade. So it actually makes a lot of sense now if he's up to that.
Exactly. Yeah, man. So he's loving it. He's enjoying it right now. What are your takes on where you're looking for entries for euro? Are you going to be
for euro? I'm going to share the screen.
Yeah, cool.
I did take some shorts today, but just the scalps because so far I've been just scalping. But let me take a look. Trading view right here. So if I'll go to euro US dollar, so now we basically reached the zone that I was eyeing. I took the shorts right here. I'm going to then open the MetaTrader 5 and show you. But once I saw this bearish candle, I knew that we're going to get lower once again. So after the close, after the retest of this orange zone, I took the shorts right here, but I've closed like half of the way. So didn't make much, but now we're reaching the very important zone. I mean, this is a zone of lot of volume. At the same time, this red zone represents the candle that I'm looking for the retracement. So anywhere here, if we're going to drop on the press conference, I'll be looking for longs anywhere here, and I think we're going to get them because it's really, really important volume zone. There's a lot of liquidity down here. It's really nice setup with the candle on a 4-hour and daily. It looks just amazing. So yeah, that's the level. And then we already touched on that, but I think we're going to get a little bit deeper in it because the power is going to be probably hawkish. So I hope, and if so, then we're going to get better entries. So I wouldn't go for the trade. Yet, but once we have the press conference, I'll probably go live for the trade.
Nice, man. I think after the press conference, we should be ready for any Trump tweets as well. Powell, if Powell can hold it down, it'd be be good to see.
It's always like that. Well, I wasn't really watching politics when the Biden was at the power. And once the Trump is back, my follow on Twitter goes back on Trump. And with an economic calendar, I'm watching the Twitter as well. So X. So yeah.
Because I was when I was doing this video the other day and talking on the dollar, I was just looking at a compilation. I found this compilation video of Trump insults and Powell, and the amount of times he's insulted him is incredible. I could just watch Trump, like his mannerisms, like that one where they're standing awkwardly and they're talking about figures, and Trump and Powell's like, no one on the Feds is aware of that number, and Trump is like, it just came out. Like, and it's the way he says things and his actions. It puts me in stitches, man. I could just watch that particular clip like over and over and over.
American politics is overall pretty funny, entertaining at least. This is the short, basically. Just a few 2 5-minute candles. That was all that I needed, and that was last trade I took on Euro that I was taking live as well. I'm taking just a few pips, but what I'm pissed about, I took one on Euro Pound today, GBP. It did really nice. And look at this. So this is Euro Pound now. You see all of that movement, and I got stopped out here because I saw the move. So I put my stop loss to break even. It took my stop loss, and then we went all the way down.
Unlucky.
It happens.
Good analysis, though. Jake, what your terminal here, was that your terminal's looking really clean, like compared to my MetaTrader? Are you just using MetaTrader there?
Yeah, it's just a MetaTrader. It's just a MetaTrader. Yeah. I'm having just dirty the trading view. I have NinjaTrader where I'm basically watching over the futures. On MetaTrader, I'm using the CFDs, but the NinjaTrader is nightmare compared to MetaTrader. But still, it's just for managing the positions. I'm not doing anything else with it.
But my MetaTrader my layout's all messy. I need to tidy it up. You're just a super clean person. Like all your organization and everything's just so tidy. Mine's everywhere.
I kind of need to have it this way. Otherwise, I'm not doing really good in my trading. Just in person as well. I need to have everything in order. Yeah. Otherwise, I'm not able to work properly.
Yeah, of course. Fair man.
So we have this. We have still 30 minutes, so...
Well, no, not quite 30. In the next, at the bottom of the hour,
13,
right?
13,
yeah.
13.
Some people... So
let me see the chat.
People actively trading right now.
I think he's not going to cut the rates. I believe they're going to...
No, he's not. He's not. It's like 97% chance that he's not going to do that, and he's definitely not going to do it.
Until he leaves, are you saying, Angel?
Until he leaves. Okay.
Are you saying he's not going to cut until he leaves, or just?
No, I mean today. Not sure if until he leaves, but at least for today, I don't think that's going to happen. But
let's take a look actually at Fed Watch tool. What they project for
March.
For March, so
March is like priced in 100% more or less, I believe.
So January we stand at 99.4% of hold, which is obvious. Then we've got 86. Again, hold 86.
Oh, yeah. Oh, okay, yeah.
So which is quite high. And then we've got still April 72% that he's going to still hold. I mean, that is absolutely genius from the Powell. And then the first cut is expected in June. So 47% June.
We've got the new chair.
Yeah.
Yeah. Well, the thing is, like the economy doesn't even need cutting yet, really. It's just that Trump wants the cuts.
Yeah.
You know what I'm saying? The economy's not really cooling, is it though?
No, it's not. But he's saying that it is. He said that the inflation is completely all right. We know the place. We should be cutting. I mean, he's talking about it like everything's fine, but I mean, Powell probably knows better, so we'll see.
Yeah, man.
Chet is asking if you did take the trade on the gold. You did, right?
Yeah, I took the trade.
Yeah. You said 52.25. Yeah.
Mm-hmm. Right. Did you take any trades on gold, Jake, or you didn't?
Yeah, but I took just 30 pips. Since we started trading ETH challenges, I'm taking 10, 20, 30 pips. Or if it's on gold, it's like 30, 40 $40 moves. I'm just trying to scalp. I just got back into scalping because just like 10 years ago when I started trading, I got into order flow and tape, basically just analyzing the big players and trying to scalp them. So taking like 5, 10, 15 pips trades. And then I got pissed about it because I went crazy. So I went back to swing trading and now I'm getting back to scalping because at least I can then share some trades on the live stream. So I'm going to be probably cross-eyed at the end of the year, but this is what it is with the order flow.
What about the winners of the 48-hour challenge from Monday? Did you announce them yet, or not ready?
Right? If we have already winners.
Yeah.
Yeah, I'm going to send the probably either tonight or tomorrow morning London session. I'm going to send again the screenshot with the names who won the evaluation. And at the same time as I'll be sending it to you guys, I'm going to send it to Angel and Ken as well, so we can start next week trading it. I mean, basically, I'm trading it. I've got the 5 accounts that I wanted to prove that you can scale up from the smaller accounts, but one more account doesn't matter. We'll see how we're going to do.
Yeah. With the traders at the moment with the data EA, are we still getting a lot of gold traders that are getting payouts?
It is disgusting. I just yesterday I spoke to a trader 30K on gold in 2 weeks. Then we've got Thomas, the trader who got the biggest payout, the 200K payout. He was also trading gold, wasn't he?
Yes.
Yeah.
Yes.
So most of the traders that I review, because in London session I analyze, and when I don't see a setup, I go and analyze some traders, and most of them is just gold longs. Yeah. Either they're scalping, so taking smaller positions, but a lot of them. And also was very interesting is that we have now a lot of expert advisors on gold, like traders who are using expert advisors and just
there's so many
advisors just buying gold. And it's martingale system, basically. I saw already 3 expert advisors using martingale system. Basically, the expert advisor is set up just to go for long.
Just to buy.
And when the market goes against you on gold, he just buys. It goes against you for $10, $20, buys again. And some of the traders just go mad on gold, just buying.
I know the amount of grids and martingale systems on gold that are cropping up these days it's insane. Yeah. Obviously, people trying to capitalize on this increased volatility. Obviously, you can have the thing is, to be honest with you, if we talk facts, like with martingale and grid systems, obviously they have a lifeline, right? At some point they are going to blow. But if you get enough cycles out them where you aim to take like maybe 50 to 100%, for a solid few weeks, and then the system busts, if you still net up and you rinse and repeat that, like I'm talking from a personal account perspective, then it's good. With the, on the prop side of things, it's going to be tricky because obviously the rules and so on and so forth. But, martingale's okay, but obviously, as I say, it has a lifeline, and
It is. I've experienced it myself on the Brexit, when the Brexit was released, not when the Brexit happened, but in 2016 when there were talks about Brexit. I was running martingale system on one of the PAM accounts, which is like something like a fund with the brokers, and my martingale system just killed the account. We run into safeguard like 30% down, and since then I didn't touch on martingale, but still I see a lot of people getting profits on it.
Yes.
Although you need to know where to stop. Like
exactly.
If it's a market like a gold where you can basically, you have high chance that gold will still push higher, then it's okay. But if you're doing it on Forex, which consolidate a lot, then you're going to get kicked out and it's going to hurt. But on gold, the martingale system last 6 months must be a dream.
Yeah, definitely.
Yeah. Looking at the euro pound once again, because I think we're going to break the monthly lows at 80, 86. Once we break monthly lows, I think we're going to get correction. So I'll be taking shorts probably then, because we've got low volume node here on IntraTrader as well. So I think we can break the lows, then we can possibly consolidate towards the upside, and then we can continue. Hopefully, I think this is going to in February. We're going to take this area right here. We'll see.
Yeah, man.
We'll see.
I'm also liking the idea of silver longs at the moment. Just similar to gold. Just would like to see a little bit of a pullback. But we've got this consolidation going on right now. We are narrowing. Shall I share my screen again quickly?
Yeah. I'm on it.
Oh, you are on it.
Yeah. I'm going to edit. No, sorry, I saw it here. It's not here anymore.
That's all right. So yeah, we've got obviously silver's been the main the outperformer in the metals market, but there's still some room to go. I said before, like this just looks like some massive freaking meme chart, really, meme coin. So on the obviously daily, still grinding higher. On the 4 hour, this is where I'm observing this sort of consolidation right now, because we're just failing to break. We're just narrowing. Price action is narrowing. Okay, so we can just look at this as I like to mark up at times, just these narrowing pennants, just where the price is consolidating, subject to that breakout. So you can just sort of see that respecting narrowing, subject to obviously the breakout. Now I'm just monitoring this at the moment. And we've had that dip, to be fair. I'll see post FOMC, but we could have another little sort of short-lived bit of volatility below and end up sort of double bottoming around this below this Asian range. And I may look at some longs there, to be fair, full port some longs. Ideally, yeah. So what I want to see is I think we could get like a bit of a double bottom formation, just like here, something like this, but just respected around that Asian range low. So coming down here, bam, 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 and then look at some longs. I think we're going to potentially get that. So yeah, either gold or silver is on the watch list, or depending on the pullback. Yeah, man.
Ken, I'm going to send you the link to the tool that we wanted to test out. All right. I'm going to be sharing once the FOMC starts. Do you want me to do it, or do you want to give it a go?
So I'm just going to be responding to the.
Yeah. I'm just going to be. Look, I'm going to send you the link. If you open that link somewhere on the other screen, basically it has, just for you guys to know, Ken has now 3. I'm going to probably share a screen for just a second. Oh, well, I can do a screenshot here. Ken has 3 options: either small drop, medium drop, or large drop, and then small rise, medium rise, large rise. And you're going to see a candle chart forming as the Powell is going to have the press conference. Where's my screen? Replace the screen. You can also open it on your phone if you want to.
Yeah, I've got it open on my phone now.
Yeah, great.
So large drop.
You can click few. Yeah, click few so people know how it works. Just click few. And just 5, 10 clicks on
drop.
Big drop. Yeah.
Oh, okay, cool.
Do you know what I mean? So basically, if it's a, let's say, if he delivers a big sentence and dovish sentence, you're going to click on a large drop. If he delivers something just small and it's bullish, you're going to click on the small candle and so on and so forth. And after FOMC, we'll at least have a chart based on your review where the dollar stands at based on the FOMC.
Okay.
You can just have it on a side if you want to, and just click on your phone.
All right.
That's good. Interesting, though. Yeah.
Let's get him up. Are you going to play out on yours, Jake?
Sorry?
Are you going to play out Powell on yours?
Yeah. I will be playing the Powells, and from time to time, I'll just switch to the charts to see what are you.
All right.
What are you?
Oh, right. Yeah. Okay. Just pull it up here on mine as well.
I need to stop the sharing just for a second, guys, so I can play it with the volume, with the sounds, and right here, Powell press conference share. Okay, perfect. So I'll be just changing the screens to chart and to Powell.
All right. Here we go.
Can you switch it to, because I can still see your chart. Can you switch it to Dixie? So at least in the bottom right corner we can see the Dixie at the same time reacting. Thank you so much.
Cool.
All right, we'll see. Do we have it already? Not yet.
I can hear myself for some reason.
2:30. We're dropping already.
Whoa.
Oh, we have it. Okay. Can you hear that?
I can hear
Yeah.
echo.
Yep.
Angel, hear yourself.
You say what?
Ken's having issues with the headphones or speakers.
No, it was me as well. Yeah.
Lot of echo.
There is an echo.
Oh, that's probably. Is it me? No.
Yes, you.
Me.
Yeah.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of these goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand.
Let's see.
In contrast, activity in the housing sector has remained weak. A temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Yeah. So
You wanted to say something?
I was going to say,
yeah.
very just neutral, extremely neutral.
Yeah.
Try closing on the YouTube.
Sorry?
Yeah.
Is it still the echo?
So yeah.
Yep.
It's crazy.
Okay,
Yeah.
now it's better.
Yeah, it's fixed.
There we go.
Okay, so let's try. Now I'm going to share the screen again, and let me know please if it still does the same. Okay.
Okay, bye-bye.
All right.
How about now?
No, echo.
Yeah.
All right, guys. So we're going to be continuing watching the FOMC, and I'm going to be muted. So if anything can just wave on me, and I'll stop it because I don't know what's wrong with it. Because I had it set up the same way as last time. By the way, how do you stand on the index? So a bit bullish for dollar, right?
Well, I was hoping to see this pull. From what he said, like right now, it's not really like. It's just neutral. It should give the dollar some breathing room to pull back a little bit, come into here. I was hoping that that neutral, because he's not really dovish. He's not really hawkish. He's just standing on business. And I thought this should. I think it will. I think it still will when the questions come. Push into 97.
Okay.
Push up to here,
maybe,
then we continue selling.
Do you think you can? If I'll send you the link, do you think you can open it on your tab?
To the FOMC?
Yeah.
Yeah.
Okay, I'm gonna send it so you don't have to. Well, it's fake, but here you go. You can give it a go.
All right, boss man.
Because if I want to say something in the middle, I would have to all the time just.
Oh, the hell! There we go.
Yes, there we go. Yeah, but I think you need to turn it off and turn it on again, because there's a small button once you share in the screen, because you need to allow playing music or the sounds. So you need to stop sharing the screen and share it again. Oh. And once you'll be choosing the tab, then you at the same time need to.
All right.
Don't worry, guys. We're gonna be back soon. You see that little toggle tool on the bottom.
Got it.
Great. Okay, let me see. I can see your screen right here. I'm going to.
Was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today on, I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today. But
yes,
and some ancillary areas. But I'm not going to.
Oh, we've got echo.
Can you say whether the Fed has responded to this appease?
I have nothing for you on that today.
Again? Yeah.
Mike.
Michael McKee from Bloomberg Radio TV.
Okay, so I'm gonna share the screen, unmute myself then. Sorry guys for the technical issues, but where's the screen? If anything goes, you can talk, and I'll join once when it's done.
All right.
That's
All right.
It'll be okay. So we've got this one, share.
When might we anticipate a decision?
No, and I really, once again, have nothing for you on that today, that either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. Not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
I think,
Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
On the market movements, I mean, what do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve.
Steve Leisman, CNBC, and sticking with questions you might answer. Thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the SEP and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course no one knows with any precision. So Is that, you got to follow up?
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira. Thank you, Chair Powell. Mara Mokway from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to inflation have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
What's up, guys?
Can you hear me, guys?
Yeah, man.
Yeah. I just stopped it because I think it's going to be continuing the same way the last time. I just wanted to mention that as we had the Powell speech, the chances of keeping the rate on hold, according to FedWatch tool, went up in both cases by almost 3-4%. So
nice.
Yeah. So I think we're going to be seeing continuous weaknesses in dollar, and I think if we're not bouncing here, we're going to definitely bounce. I'm going to be waiting for reversal, and I think we'll go back towards the upside. I can delete this. I'm not sharing the screen. All right. Let me share the trading view. Are you aligned, Ken, with possible continuous of dollar weakness?
Yeah, I personally just want to see the Dixie coming into 97, come closer towards 97. I think we can pull and stretch. Given you said that the chances of holding have increased, I think that should give the dollar a little bit more respite, just because it's obviously not so dovish. Obviously, if it's the other way, different story. So I think we've got a chance to come all the way up to 97, which would mean euro potentially coming deeper, closer towards where you, I think, maybe like 118.80. There would be
that would be actually really nice if we go down that far, which I'm not really sure about. Possible, it's possible. I mean, I'm not going to go for longs now, but we're now basically having this resistance, previous support. So there's a chance that we're going to bounce from it, take these lows, take whatever liquidity is below these lows, and also in a previous point of control, and then go towards the upside, as you said, which is like 18.8, which would be actually a really nice level. But if I'll see possibly close above this zone and then breaking these with candle breaking these highs, then I'll be possibly then I'll be not possible, but then I'll be definitely taking longs back to this zone. If I'll see the reversal now and close above this, then yeah.
Yeah, I think Yeah, either way, like what we're observing here in the 1 hour is just a pullback structure. These lower highs, these lower lows, we're going to break out of that structure and it's going to be continued business.
Take a look at your screen.
Yeah. As soon as we break out of this little pullback structure, we're going to just go. You know, it happens every time we get that, you know, that consolidation and that nice breakout, consolidation, breakout, and it's just clockwork at the moment. So I think if I could tomorrow, guys, I think what would be quite nice, whether we break out now, whatever, fine. But tomorrow, keep an eye out for potential Asian liquidity sweeps. So sweep the low may happen at London, may happen at New York, but I think that opportunity is going to be there tomorrow as well. So just continuation of structure. If you see that sweep, rub your hands together and look at some potential longs, not financial advice, but that's what I'm doing. So yeah.
So if you see tomorrow morning in London or EU sweeps of the Asian lows of the Asians of what we're going to get the Asian session, then you would go for the longs right away.
I'll go for the longs. Yeah. Because obviously nothing's changed. Structure's there. I'll be taking it. Okay.
I'm more like standing on the idea that we are reversing as we speak.
It looks like it at the moment. Yeah.
Due to the Fed Watch tool chances going above, I mean, everyone's going to take a look at it, saying, okay, we're not likely going to get the rate cut from Powell. Doesn't matter how much Trump pushes him. So we are continuing towards the upside.
It's possible we break out and then consolidate like a little bit in Asia. We could break out now and start and consolidate a little bit, and then we get another breakout tomorrow. I think.
Yeah. How about indexes, Angel? Do you have any news for us?
Well, I actually do have an idea for pound dollar and the indices. Pound dollar took a beautiful long last week. I mean, it was last week.
Oh yeah, it was this week. This week, it was this Monday.
Only high. It was beautiful. It was a beautiful one.
I closed like 20 pips on it, but you holding it was really nice, really well done. You hold it the entire the whole way up, and I got 2 messages on Discord of people who hold it the same way as you. I think he's in a chat.
Yeah, I mean, it's like the monthly high was too obvious. You know, it was pretty much the target. So for the indices, we do have this hourly gap as a condition, right? So I would love to see lower prices in the meantime, just because we have this daily gap right here that I would love to see getting filled right now on the ES. If you look at this gap, right. So it will be nice to see that price. I mean, that gap being rebalanced, and then we can just go for longs again. But we can expect the price to tap here, and then we'll see if this is going to hold, and it's going to trade back to all-time highs. But for now, if you look at the hourly, I mean, it looks bearish to me, right? I was tape reading the whole morning, the shorts on the ES. It was actually clean. On the M5, you'll see this beautiful structure going into the morning right here after 10 a.m. It was just clean and straight, lower highs and lower lows right here the whole morning. And then we're now just accumulating here. So I want to see what's going to happen with that hourly gap at this time right here. Because if you look at this, right? There was FOMC and then the Powell speech. We're actually consolidating here. We might take liquidity from this high with this hourly gap. If we pull an SMT, which is the divergence in price, will be nice to see if we have a nice then a reaction on the lower.
Would you take the short?
To take shorts? Yeah, 100%. I'm just waiting for a reaction, because if you look at the ES with the daily gap resting below us, right? And all these lows, will be nice to see. What I would love to see from here is pretty much the price going down here, taking the sell side, rebalancing on the daily gap, and then going straight higher towards the all-time highs, right? And if we use a Fibonacci here, I think this is actually a great level. Let me set the Fibonacci. All right, slightly the 50% area. So that's why I would love to see shorts from here. So that's hourly gap is a condition. Let me look at the 1 minute. All right, so if I have enough confirmation here to take shorts, I'm going to look for one short opportunity here. I'm going to target this low, and then of course on NQ, what we have, or MQ is about to create a new gap here on the daily. This one. So you can expect the price, if we close like this tomorrow, to tap into that gap and see if we're going to continue higher, which is very likely. So let's see the way we just develop for the end of the day. And let me actually look for the cable, pound dollar, UAP USD. Yeah, it's fine, it's fine. All right, pound dollar. Just look at this gap, guys, on the 4-hour. This gap right here on the 4-hour.
Going for another longs.
Yeah, I would love to see the longs. It will be nice to see a sweep from this low right here. Like if we're consolidating right here for the entire overnight session doing Asia, and we sweep that low, respecting this gap, I'm going to look for long higher. Of course, I'll be sleeping, so that's the only issue. But let's see at 5 a.m. once I wake up if I can actually take a trade here. Yeah,
it looks nice. It looks really nice. I agree with you. Those longs. It looks beautiful. Actually, it looks really clean. I think.
What is the level? 37.2, isn't it? What's the level of the gap?
The level of the gap is
a little bit above 37.7.
4-hour.
Big bull flag.
Yeah.
37.7, pretty much. 37.8.
That looks actually really nice.
Yeah, let's see what happens here.
Okay.
But yeah, that's all I have.
So we've got bullish gold then. Nothing really changed for the gold. Hopefully we're going to get the correction that we got from Ken. Now gold is pushing higher. Of course it does.
Yep.
Okay, and then we've got, again, I think we can say that, at least I would say, bullish euro US dollar, bullish GU. So weakness of the dollar will persist, and I'll be looking for the longs on euro pound once we break the monthly low, and that's probably all that I'll be looking for. Mostly the major FX, just to get some scalps. That's probably all. All right. Do we have any other markets? Or I thought the FOMC is going to be a little bit more excited. That
it was really quiet.
It was quite quiet, as you said. Yeah.
Yeah, Baba.
All right then. Let me check the chat. And all right. So I think we're good to go. Thank you, Angel. Thank you, Ken, for analysis. I hope we can use
of course
or utilize the tool more later on another FOMC if that's going to be better. But I don't think. I think we're going to get two boring FOMC in February and
probably very
March and April.
March.
Yeah.
Yeah, most likely.
All right, guys. Enjoy your night, and I'll see you again on Monday. Then.
Sure. Take care, guys.
See you, boys.
Bye bye.